Good morning. Yeah, let's get right into it. I got a lot of things I'd like to talk to you about. First of all, you just came back from PDAC, and you always hear positive things from companies coming up, out of a conference. It's not really a very good model for a company to say they had a bad conference. So you always hear positive, but as an investor who's been at this game for a while, I'm able to sort of add context to CEO and IR comments and get details on what exactly was positive. And, my take from what I'm hearing, although I was not at PDAC, was that there was a lot of good investor engagement with sort of larger high net worth investors who are writing checks, they're getting into financings, and they're getting more engaged in the sector. What was your takeaway from the conference?
That's a good question. I guess the first thing that comes to mind for me is I have a friend who lives in Perth, Australia. And, the Aussie market was, it was eating our lunch for a long time. And what was interesting is, in addition to Dolly Varden, I work with a group in Vancouver, the Fiore group, and there's a few other companies that are in the office. And my successful, veteran, seasoned friend from Perth, Australia, who has really been eating my lunch for the last, what feels like a decade, as we've had so many competing asset classes, whether it was marijuana or crypto, whereas they've had, just mining's been the focus. And you look at all the Aussie gold companies that have come into Canada and acquired projects. I think that's, exhibit A in terms of evidence of how well they've done relative to Canadian mining companies. And he was looking at me and he was kind of envious, and he was just going, wow, like Canada's back. And he was looking at Dolly and he was looking at a few of the other companies in the office, and he was just going, and I had a moment where I thought, whoa, like we're in a market. And I think, what a highlight of that for me was the bought deal that we put up on the first day of PDAC. So, when you talk about, trying to take the temperature of, a company or, a mining executive, I think it really depends on which company and which executive you're talking to. With 1,500 companies out there, I think most are struggling. But I think everybody feels like in the last week or so, there's been a major, major shift. And, the experience that I've had over the last 20 years is you don't need a lot of time for that shift. Like it can turn in a day. And it feels like we've had an incredible switch here. And so it was very positive. But I think back to days like 2010 where you couldn't walk 5 feet on the conference floor. I met with somebody who's got a lot of experience, and he made that old comment of, I could have rolled a bowling ball down in the alley and not hit anybody. So the bodies aren't there yet, and though the investors that are there, they're sophisticated and they're managing significant funds. But I don't see the tourists coming through yet. I don't see the average retail, which is probably a really good sign.
Yeah, that is probably a really good sign, because when the floor is full of tourists, then we know we're closer to the end of the cycle, not the start of it. By the way, as you're speaking there, gold futures just hit $2,200 an ounce. Like, it's kind of surreal that we are talking today and gold is at $2,200 an ounce. Silver's 24.75, which is obviously it's lagging a bit, but that's still a pretty good move recently. But $2,200 an ounce for gold. Thinking back to where we were in this sector 10 years ago, gold was like 1,100 in 2014, 1,200. 2,200 was a long way away, and here we are. And it feels Like if you've seen some of my tweets the last couple of days, it feels like this is the start of a major trend shift. And it's crazy to see gold moving from 2000 to 2200 in a few weeks, yet the junior mining sector is very much still flat on its ass. And so it's like to hear those conversations from PDAC that guys are writing seven-figure checks now, um, and the share prices of many companies are still very, very low compared to this move that we've seen, in gold. So it's like this surreal moment in time, I think, and it feels like it's a time where there's opportunity, but as we know, things can move very, very fast, like we saw in 2016. So I want to talk to you about the financing that you announced a few days ago. And you got Eric Sprott. He's writing another check to Dolly Varden. He's a big shareholder of the company. So can you just tell me how this financing came together and who were some of the people, the more notable people that are taking part in it?
Absolutely. But before I go there, I just want to say one thing. Like we're, this, like, and I've been saying this for a while. This reminds me of 2006. Back then gold broke 500, and to me, 2000 is like it's the new 500, and the stocks did nothing. And you mentioned junior mining stocks. It's bigger than that. It's the seniors too. The seniors haven't budged. And I'm actually looking at an image right now. And the title of the image is "The Global Erosion of Specialist Capital." And the two numbers I want to highlight here, in the UK, 14 years ago. So this is 2010. And, I'd argue that was the best mining finance market of the last 100 years. There was $40 billion of specialist capital for resources in 2010, just out of the UK alone. There was an additional 16 billion in Canada. So between the UK and Canada, there was $56 billion for the Barricks, for the Newmonts, for the Dolly Vardens. Today, there's a combined total of 15 billion. There's 2.8 billion in Canada and about 12 billion in the UK. So despite companies paying down debts, record dividends, record resources, it's just capital. The capital's in tech, it's in other sectors. But I believe, Rob, that the numbers that we saw in 2010, we're going to go to multiples higher. And I think that's the big opportunity, specifically when it comes to Dolly and our financing. Look, we had a monster year last year. We hit results that I would have never dreamed on our project. 93 meters of 357 grams of silver, not at Torbrit, not at Wolf, but up at Homestake, the gold-rich Homestake. We're hitting 93 meters of 357 silver EQ. But what I think really has captivated the attention of some very sophisticated investors like Eric Sprott. Eric Sprott's a thematic investor. Eric Sprott's got billions into the space. He doesn't need a little bit more of anything. He's got his chips on the table, his bed is made, and he's ready. But for a guy like him, we drilled 12 meters of 80 grams of gold in a brand new zone in what is a silver dominant system. The appreciation that we have as a company and our shareholders is we're in the Golden Triangle. We're in an area where SK produced 160 million ounces of silver at 2.5 kilos average and 3 million ounces of gold at 50 grams. What starts as high-grade silver mines, SK, Premier, Brucejack, turns into big gold systems. That's why the investors have come here. That's why the investors came to me. I had 3 investors that wanted the whole book. We had a $15 million book. I had 3 investors, including Eric, that wanted the whole thing. And so what we did is, with the excess demand, we crossed a block off of one of our partners, our shareholders, Fury. So Fury is now a 19.9 shareholder, and all that overwhelming demand from our existing shareholders, the Sprott funds and the others, has gone to what I think is an incredible deal for the company. It puts us in a position where we're fully financed for the year, but it came together on the back of those big new discovery numbers and us wanting to go out and follow up. And we've been saying this looks analogous to Brucejack. It's time to find out if that is the case, and how big this new zone is, and if it has legs, and if this is going to be the next project in the Golden Triangle that we can talk about when we talk about the SKs, the Premiers, and the Brucejacks. That's the question we're looking to answer this season.
Yeah, and that leads me to my next question. So we had earnings from Newmont a couple weeks ago, and they basically said they are restructuring the company. They're tightening their focus on Tier-1 assets, Tier-1 jurisdictions. They moved out of Ontario. They're selling coffee in the Yukon. They're focusing on the Golden Triangle. So they're leaving multiple parts of Canada, and the only place they're staying, it seems, is the Golden Triangle. And they're really focused on the Golden Triangle. And it seems that they are committed to building this into a Tier-1 mining, destination for them. So is the size of the financing and the way you're topping up the treasury, I mean, is this with an aim to have this be a very big year for Dolly Varden, where you really go out there, you do 50,000 or more meters and really try to show that you guys have the goods?
No. And look, I don't think the market is paying anybody for success. And so, look, we're starting with a 30,000 meter program. We've got some priority one targets, a third of which are at this new zone up at Homestake Silver, this new gold zone. So we've got about 11,000 meters planned there. We've got another 10,000 meters planned at Wolf, which is an area that's pure high grade silver that looks like it's another Torbrit mine. Torbrit was when it was operating for a decade, it was Canada's third largest silver mine. And we have 43101 compliant just at Torbrit alone, about 35 million ounces of silver at 300 grams per ton. So a third of the program that I've planned and my team has planned is going to Homestake Silver, a third is going to Wolf, and a third is on some regional targets to try to build up the next Homestake, the next Wolf. And look, I'm trying to balance minimizing dilution, but advancing the project. So it's a big program. It is. There's going to be multiple rigs, a minimum of 3 rigs turning to start, a minimum of 30,000 meters. We could get up to 50 upon success, but our approach is pretty surgical. And I don't think we're in a moment right now where you're getting paid the way you should. With our peers trading at 0.2 times net asset value, we appear to be trading closer to 0.5, but that's based on a resource estimate that's aged and dated. So we're probably trading more in line at 0.2 based on some of the new discoveries we've made. But to get back to what you're saying about Newmont, and I say this like a bit tongue in cheek and a little bit, I say this as a bit of a joke, but I want, and I also don't want some of these corporates to start moving. Like, take your time, pay up. But the problem is they're going to pay up in shares, and their shares are going to be worth more later. So it's all relative. But they got competition. I'm being approached by some funds that have significant money, like market caps that are larger than the so assets under management that are larger than the market caps of a lot of these gold companies combined that are coming to me going, can we have a look? Can we come to site? So when you've got institutions that are, have got over 50 billion, some of them 100 billion, going, hey, we like what you're doing. Can we take a closer look? I'm thinking, well, you know what? It's not just the larger mining companies that are going to come in and invest and develop and take out the Dollys and our peers. So there's a lot of competition right now, whether it's coming out of the Middle East, it's coming out of the U.S., or it's coming out of Australia. And I just think, what excites me is that number that I quoted you of the $15.8 billion that's out there for this sector. That number is going to grow, and it's going to grow, and it's growing quickly.
The company is called Dolly Varden Silver, and obviously at the southern end of your property footprint, there is a lot of silver. There's Wolf, there's Torbreck, Dolly Varden, and at the north end, you've got a lot of gold. And a lot of companies, they put silver in the name because they think they're going to get a premium valuation for the silver ounces. But you've also got a lot of gold as well. And at 2,200, gold's not a bad thing to have. What's the gold, silver split in terms of, and you mentioned that the, resource you have is a bit dated now. So what do you think the split is now, and when do you do an update?
Good question. So look, the split as of the resource is 50-50, but we've had a lot of growth on the primary silver side. And I've got a friend that runs a big silver company. It's, billions of dollars market cap. And I was talking to him about this one silver opportunity. And he's like, well, there's lead and there's zinc and then there's silver. And he goes, you can't use zinc or lead in a photovoltaic cell. Like you need silver, right? So that's what we're interested. We're interested in the silver. And but look, I think we're still 50-50. We're 50% silver, we're 50% gold. We're starting to tag into some other metals, but they're not part of the resource. We don't include them in the resource estimate, and we don't use them when we talk about a silver equivalent. It's half silver, half gold. And look, I'm not picking what's endowed here, right? If we tag into a very large gold system like Bruce Jack or like SK, I'm not going to be disappointed. Um, I'm personally using silver to get more gold. I've been obsessed with gold for the last 20 years of my life. And the reason I made a decision to run a silver company is because my hope, and it's playing out pretty well here. The ratio right now is 88-1. It'll normalize. Will it get to 15-16-1? I don't know. But I experienced this one time in my career where I invested in silver at a 70-1 ratio, and when it got to 30-1, I exchanged my silver for gold. That's what I'm trying to do here, and but look, I think I'm almost changing that idea though with the growing industrial use for silver. We're half of all the silver that gets mined in the future is going to go to solar panels, and so I'm starting to think maybe I hang on to my silver a little longer than I originally thought before I make that change if I ever do.
Yeah, I'm looking at the weekly chart of silver, and it has a big breakout level around $26 an ounce. It's right around that $26 level, and if it does break out above that with some force over the coming weeks, I'm not going to throw out a price target, but it would be a very positive thing. It would be very positive to say the least. So, in terms of silver miner trends and money flows, What are you seeing in terms of the shareholders of Dolly Varden? There's a few ETFs that hold Dolly. I'm not up to date on all of them and the amounts that are held by each. But what are you seeing there? And have the silver funds out there been net buyers of Dolly Varden in the last year, or have they been basically staying about the
Well,
same?
it's interesting. So if we go back to December of 2022, we started getting our first inclusions into the ETFs, and it was like wildly creative for us. Our shares, because they're so tightly held. You've got Hecla in for a big piece at 15%, Fury at 20%, Eric at 10%. Then you got these big media institutions like Fidelity at 7.5% and others. And so, like, there's really, of the 270 million shares that we have issued, there's only like 10% that are in the hands of the public. So it's about 25 million shares. So when the ETF decided on, I think it was December 16th, 2022, to take its first position in the Dolly, and they went in, they bought 3 or 4 million shares, our share price rose 30% in one trading day. And as another ETF came in the spring of 2023, again, a huge appreciation. Our share price rose to $1.24 a share Canadian. And it was at a time where the silver price was at $26. And I always look at that. I always look at silver like this. The average cost, the ASICs of a silver miner, a good one, is around $20 on average. So at $23, you're making $3 an ounce. At 26, you're 100% more profitable. And so when silver went from 23 to 26 last spring, you look at Dolly, it was trading at $1.25 Canadian. You look at one of our large shareholders, Hecla, they got up to $7 a share USD, $7 a share. And you look at the impact of silver falling from 26 down to about 20, and that sent Dolly shares in half. It sent Hecla's share price in half. And yet, even though we're back above the 50-day moving average, which is around 2350, we're not seeing the follow through in a meaningful way in the equities. And I think that's typical. It's normal. It's a little surprising that silver is lagging with this significant breakout. I would have thought that as gold broke 2100, you would have saw silver really snap. But I actually like the price action in all this stuff. Let's start with gold. 1980 has been an incredible base. 2050, another one. Like, we're base building at really nice prices. And the same is true for silver. What used to be resistance has now become support. So the next targets are $26, $29. And if you think about a company like Dolly's share price tripling in value as silver went from 18 to 26, and if you go back to 2020, silver going to $30, like it's gonna get bananas in the silver equities. And so the trend is sadly, there's no inflows, no major inflows. Actually, the silver ETFs are going up market and buying, essentially gold miners. They don't really hold a lot of pure silver plays. We're currently held in only one ETF, even though we qualify for others. And so it goes back to the erosion of capital in the space. The money's just not there yet, but I'm confident it's coming, especially with the price action. Like, investors are looking for returns, and there will be a great rotation in. I think one thing that's subduing that rotation is for a lot of big managed money, with interest rates with a bit of a pulse today, with interest rates, arguably 300% higher than where they were just a few years ago, there's a pretty nice yield you can get risk free. Now, the question you have to ask yourself is, with what is the real rate of inflation, and how much return do you really need to stay ahead of that? And I think that's why I've got 50% of my net worth in the metals, or in proxies for the metals, like equities, precious metals equities, because I think that's going to outpace whatever inflation, whether we trust the numbers that we get, or whether we take the numbers that we really experience from daily living.
Yeah, that's a very good point, that we are building bases at very nice price levels in gold, and starting to in silver. And you have to wonder if silver in the 20s is going to be short lived, and it's going to be a thing of the past here soon. Um, one of the reasons why I wanted to get you on is I like to highlight Golden Triangle companies in March and April, just before they're getting ready for their most active period of the year, and there's some excitement going on. Dolly had a tremendous run in March, April of 2023, and it's done that a few times in the past, where it has like a seasonal bottom in March. um, how are you feeling about that seasonality this year? And once this financing closes, do you anticipate that there'll be some more buying coming into the stock?
Yeah, listen, for me, it's like this multi-year build up. It's bigger than seasonality. That'll play a role. We're getting back out there. We have the opportunity to follow up on some of the drill success. It's going to be newsier. So you're 100% right. That is going to impact. But what I'm excited about, when this financing closes, and I think it's March 21st is the anticipated closing date. But this is a bought deal. So essentially, you know, the bank's on the hook. Like it's done. But from a technical standpoint, it'll be completed on March 21st. Um, I think why our shares did so well on the back of silver moving to 26 last year was the fact that we were fully funded. So for me, when I go all around the world, and I'll be in Germany next week, I'll be in Frankfurt, Munich, Berlin. We'll be introducing the company to 90 new investors next week. And one of the things that I think is going to be really powerful is if one of those investors likes what we're doing and understands, the opportunity of a primary silver mine with size, with scale, with grade, with discovery potential, with incredible shareholders, an experienced team that's done it before. If they like it, there's no financing to buy. And the reason our share price got up to $1.24 last year, in my opinion, is because we were fully financed. And there was only one way to get exposure to this name. And that's going to be the case now in the months ahead. If you want exposure to this name, and really there's only so many ways to play silver. And most of those ways are in Argentina, they're in Bolivia, they're in Peru, or they're in Mexico. And there's a reason the companies in those jurisdictions are lagging. And so if you're looking for primary high grade silver, and jurisdiction is important to you, um, this is the only name I know that's, apart from, say, Hecla, right? And that's up market. That's significantly up market. We're talking about, I think, in Canadian dollar terms, something like a $4 billion valuation versus the 230 million cap that we're going to have once we close this financing. So I think this is really the only name to know, unless you're willing to take on the jurisdictional risk of Mexico. But I don't know if I'd really want to be sitting on an open pit opportunity that wasn't already in operation in Mexico today.
Yeah, yeah, yeah. That's a good point. Well, I want to ask you two more questions, and also I want to open it up if somebody from the audience has a question for Shawn. Go ahead and ask to speak, and I'll activate your mic. One of the things that you did in the last few months was sort of, like an opportunistic acquisition of the big bulk porphyry system, which is to the southeast of your main property footprint. And this is an interesting um, target for more exploration because it's the possible heat source for the whole area. Essentially, it's where the gold and silver may have been sourced from. So, what are your plans with big bulk? Are you gonna, drill that this summer? And what's the plan there?
So we are, again, like we have a ranking system. So when you drill on a brand new zone, 12 meters at 80 grams of gold, um, that's the priority, right? And the priority is the 93 meters at 357 silver. So depending on how big this drill program gets, like in the initial 30,000 meter plan, I don't have any meters for big bulk. I'm trying to find meters. But again, what's driving me is I don't have to do it all today. Like this is a process where let's let the exploration and the ground truthing and the data drive and prioritize and rank. Um, but yeah, listen, I'm confident we will drill more than 30,000 meters. I'll give you an example. Last year we planned 42,000 meters, step one. We ended up drilling 51,500. The year before we started with 30, we ended up doing 37,500. And the year before that, again, we're constantly upping our drill meters in season because of success. So to answer your question, look, I'd love to pop 3 holes into the big bulk. I know it's there. It's a fertile porphyry. Anglo had drilled it at surface, and in addition to the big disseminated, lower grade copper gold that you typically see with porphyries, what big bulk has that I think is as interesting as the big billion ton target. Um, it's got some veins at surface that are uber high grade gold and copper, and so that excites me, because you get enough of those and you get some tonnage, and that's really interesting. The reason I made the consolidation, number one, it was cheap as chips, right? The company that had it was struggling, and we were able to take over the option for next to nothing. But more importantly than the mineralization, I've been on this theme, which has started. The idea is to consolidate the whole camp. And the first big swing on that consolidation I took was acquiring Homestake. And the next swing I took was a smaller swing, which was big bulk. But what I've done is I've reduced the entities in the area. And where big bulk is it's in the middle of a large Hecla land position. So in addition to Hecla being a 15% shareholder in Dolly Varden, they also own a huge property next to us. And now, you've got our Kitsault Valley trend, you've got the big bulk, you got Hecla surrounding the whole thing. They've got something called the Eliance trend, which is a parallel trend to our Kitsault Valley trend. This area is, and we're doing other things. So, we've just applied for a grant from the infrastructure fund. We're trying to bring in $10 million jointly with another company, non-dilutive, to study road expansions, power extensions. And we're doing this. I haven't really been socializing it to shareholders, but, if we get this grant, this $10 million grant from the infrastructure fund, again, like there's so much to do here in this area. It's got incredible infrastructure. There's power. There's deep water access. There's roads. There's a regional airport. We're not on the side of a mountain. This is nestled in a safe valley where mining has occurred here for the last 100 years. And so look, I feel very grateful for the fact that we've got the supportive shareholders that have a long-term vision. We've gone through the depression in resource equities. We're coming off the bottom. We're going from the sub-basement to the basement, and we're in the driver's seat. We've got cash. We've got the people. We've got the prospectivity. We've already got a huge endowment. And now it's just a question of how big does this thing get? Dolly Varden has been the subject of two bids in the last few years, and it wouldn't surprise me if we're in the subject to more bids in the future. And one of my advisors said something to me yesterday that I thought was really interesting, and that is a price is not determined by a buyer, it's determined by the second highest bidder. And I think that in order for us to maximize this opportunity for our shareholders, having conversations with these large funds that are looking for projects and corporates is going to help us realize the value of this company. And as long as we continue to expand and extend and discover and grow that mineral inventory, we've got something that's rare. And I think that's why, we've got a value that's not, a lot of our peers are trading at, sub $10 million valuations. I think the market recognizes that this is the real thing.
Yeah, I mean, for sure. I mean, even in the depths of the last year, when the sector was really down and out, Dolly still had a solid valuation and never really dropped under 60 cents a share. Um, you know, First of all, I want to say we had this conversation and the first moment in history that gold traded at $2,200 an ounce. So I think that is serendipitous, and I think that's a good omen. Final question, and I want to sort of add to what you just said, and then I'm going to let you get on with your day and your weekend. Um, Hekla's got 15%. You've got Eric Sprott at just under 10%. Clearly, Hecla, this is their neighborhood and they're the obvious suitor. I mean, it's blatantly obvious that they're the suitor. But we've known in the past that if there's no competitive tension, if there's not a second bidder that's waiting to come in, mining companies will often wait and wait and wait, and they'll wait to do the deal on their terms, either when the company they're acquiring is really low and sort of needs capital, shareholders are tired, or their share price is really high and it costs them less to make the deal. So, how do you bring up the competitive tension here, and how do you bring in that second buyer?
So, one thing I want to say is I've come in here and I've gone out and I've told the world. I've been to, every city under the sun, and I've told the world about Dolly Varden. And it's why during a depression, I've been able to raise $90 million. And we haven't done a down round. This last financing was the highest price financing we've ever done in the worst market. You talk to anybody out there who knows this business, and they'll say, um, you know, this is the worst they've ever seen it, the worst they've ever seen it in 30 years at least. And so bringing that capital drives discovery and it drives acquisition. That's the other thing we do. We're not sitting back and waiting for anybody. We're driving this thing forward, and we're driving it forward, and we're doing all the right things in that we're trying to show that this is a saleable asset. And whether we develop it ourselves or not, or whether we sell it, by doing the infill drilling at Homestake, Maine, showing the continuity, stepping out, making new discoveries, making acquisitions, raising money, signing confidentiality agreements with others. But I'll tell you, there's the market will dictate the speed and the pace of other corporates getting pushed by their boards and their shareholders to be acquisitive. And I think we're moving into a moment where others are going to come and want to grow. There's some companies out there, very few, because most of Hecla's peers have actually been falling at a time where Hecla's been growing. And so, but there has been some new companies, new actors in the space that are having some success and that they're looking to get into what they would perceive to be a very safe or safer jurisdiction than where they're operating. But the other thing is, look, I don't have many passive bones in my body. I've been out there, raised $90 million with some smart investors. I've made a $50 million acquisition that tripled the mineral inventory. And I am reviewing projects, signing confidentiality agreements, and looking to be acquisitive myself. But so look, I'm telling you, I've been doing this for 20 years. I work with some relevant companies that are having success at a time where many aren't. And, I just want to say one thing. Um, yes, the market cap has grown, but from the day I started, and this is the only thing I care about, the share price is up and stayed up over 300% at a time where, tell me how many companies can say that. So, yeah, the market cap's gone up, but hear me out. This share price, the return to the investors that got behind me on day one, that's over 300%. And we've done that at a time where, look at where the venture exchange is today. Look at where even the big boys are today, the GDX. We've done that at a time. And so this next chapter, as we move into stage two of this market, and you see the $2,200 gold trickle down to the equities, watch, this company will be a leader.
This recording will be on my YouTube channel at Goldfinger Capital on Monday morning. I'm a shareholder of Dolly Varden. Dolly Varden is a sponsor of Goldfinger Capital. Shawn, thank you so much for your time, and let's do it again in a couple months.
Thank you so much for having me on. Thanks for everyone who's listening.
Cheers. Thank you.